All right, Derek, good morning. Happy Tuesday. How are you today, my man?
I'm good. It's our first time together because I was usually with the other guys. I'm David, just letting you know.
Oh my God, did I screw it up already?
It's okay, brother.
Holy smokes.
I'm pretty chill, but I'm a David, not a Derek, so you know.
Yep, we had Derek. You know what? We had Derek last week. I was looking at some of my notes and I read the wrong name. So
he's the better looking one.
Okay, but you're the funnier one, apparently. So, all right, starting off here behind, we'll see if we can kind of bring this back together here. Appreciate you being cool about that. One of the things that I had asked Scott and Derek, and now we'll ask David recently, was about the morning routine that you guys have in preparing for the market. One of the things that we've done here is we're trying to break down all of these stories, trying to break down what's going on, what happened overnight. But I know that everyone's morning routine differs. And when I asked Scott about this, he launched into going into the sauna and the cold plunge and all of the really cool stuff. So I got to know, what do you have on your morning routine?
So typically I run about 9 miles each AM. Then I sauna. No, I'm teasing you. So
I was like, here we go. You guys and your health freaks. This is unreal.
No, that's Scott. I smoke 4 packs of cigarettes a day, a couple shots, and then I just start throwing darts. But in all seriousness, the routine is like essential to me. I have a basic routine for almost 30 years now. And it's basically acquiring all the important information for the day, for the week, so I can have a plan for what I'm focused on today to make money, the week to make money, and my swing positions where I want to be as far as sizing. And it's pretty simplistic. It's going through news, right? So whether it's you guys, whether it's Trade the News, Briefing, Bloomberg, and really looking through the up and down grades, because when you're as old as me, you begin to figure out what upgrades and downgrades mean. As we both know, very often they mean absolutely nothing. Very often it's Katie Huberty on an Apple, or it's Dan Ives on Snowflake yesterday, and they can move a stock. So I go through all those. This means something, this doesn't. This is a stock I don't own. This is going to move it for the day. I want to be in it. And then what I do is unlike most people, I go through CNBC and I see for any information I miss, or maybe Kramer mentioned a stock that's going to be goosed up and up a little too much because he opined on it on his show. Maybe it's a cute short opportunity, but it's information. So I will actually go through Fast Money and Mad Money's recap on CNBC. And I will then formulate all that information and in a very simple format, produce an AM call for the inner circle. And for myself, that basically says, today, step 1, step 2, step 3, this is the size I want to be at this level, and enables me, because I'm not much of a reactor. I mean, if I have to react, I react, but I am a planner. So if X happens, I do Y, and we should get Z. So in order to enact that plan, I go through the news, I go through the charts, and then I go through my favorite 100, 200 Twitter follows. Not the, we all know most of Twitter, a lot of silly people out there, but there are 100, 200 great people providing great content, including charts. I go through those, and that's how I develop an AM plan. I wish it was the running part, but I leave that to Scott.
Yeah. Okay. Well, that makes a ton of sense, and I agree with you on Twitter and all of that information. First of all, formulating a plan is going to be paramount. This is what I try to do every day as well. A good plan is going to be key to successful trading. Real quickly here, be sure to download David's free ebook. Stay one step at the top of the market. You can go ahead and use the QR code right at the bottom in order to do that. Okay, so really good stuff on the morning routine. Let me ask you, how does a former money manager, venture capital investor, how is your approach to the market different from, let's say, a retail guy? Just a regular old retail guy. I know you just kind of went through your morning routine, but how does this really differ and benefit you?
Not that much. The only difference is that there's nothing special. It's just I have maybe a little bit more information than the average trader. Definitely not smarter, and it's how I access that information and use it. So here, let me give you an example. During that SPAC insanity, since I did a lot of SPACs in the early 2000s and kind of helped put them on the map with a few big name ones years ago, I understood basically the toxicity of what a SPAC was. I also knew the CEOs, half of them, and who would be followed and who Kramer would talk about. So it kind of provided me a little bit of insight to the SPACs that might work, which luckily enough I was in, but let's face it, a lot worked. And then to say, I mean, I even told people, if you can find a SPAC ETF, short it, and then go to sleep and thank me in a year or two. So I think during moments like that, or looking at a company and not just looking at the PE, but maybe realizing the free cash flow is more important than the PE in certain sectors, that's maybe where that additional information helps. But in essence, we're all doing the same thing. Best risk reward, maybe not too crowded trades, trying to be there before the next guy, but not too early, not chasing broken names, being in the right trends. There's no magic that anyone who's been a money manager versus a trader has, except maybe how they apply the very same rules.
Okay, that's really good stuff. And that should give the retail guy confidence out there. Look, if you do your homework and you pay attention and you read, you can do this too. So really good stuff. Now, kind of along the same lines here, can you describe how you find your edge on a daily basis? Like how do you pick different trade setups where you feel real good about what you're going to do? You just talked about having a plan. So if X happens, then and we see Y, then, or if X or Y happens, then we should see Z. How do you actually find your edge?
Okay. So I think a day or two forward. Here's what I mean by that, because I think I have a good example. It's like rather than talk about 2 weeks ago, like yesterday. So we have been very mid-cap focused on a lot of these leaders. Shopify, Snowflake, Affirm, Block have been big positions of mine. And yesterday, I was taking most profits on Snowflake, on Shop. That was an insane open. Tesla into 360. I sold calls I had held stock. But here's my point. So there's pressure on NVIDIA this morning, and there's pressure on the whole big cap sector. Few names were doing okay, like Google, which I'm long. But the point was, we're seeing some pressure. So I don't think it's over for NVIDIA, but I was pretty loud even on Twitter. I don't like the print. I'm long the stock, but I don't like the print. I wouldn't buy calls. But once it pulls back, I'll gladly buy it. So we get a pullback from 152. We come closer to the 50-day, which I talked about in the morning. I said the closer we get, the more interested I am in adding back to my position. I bought a share of NVIDIA, and I trade NVIDIA every week for the first time in a month because it's kind of been nothing to do. So I said, while everyone's ignoring big cap and it's over, I think it's the first time in a long time when we get the equivalent of a 10% pullback. It was almost exact 10% pullback to actually put some stock on. So we put stock on as low as 135.90 because it got there like right at the close. There was a rebalance. And most of the day in the 136s, and right now it's 137.89. I'm not, retiring off the trade, but it's a great way to position, plan ahead, and know that just because maybe small cap might have topped for a minute, right? There was some craziness yesterday. It might take a break. There are other things to do because what we've seen is this is a market that's constantly rotational, right? There's 5 sectors working, and then when they slow down, there's the next 5 working. So it's just basically thinking beyond 4 or 5 stocks and realizing financials, fintech, and Tesla may have led. And then when they take a break, like they might the next couple of days, maybe NVIDIA becomes exciting again. So that's kind of what we do, is think beyond being day traders and what we're doing today.
Okay.
Use the averages,
Yeah, absolutely. And that's actually something that we do here quite a bit. So that jives a lot. Really good stuff there on NVIDIA. Let me ask you just kind of a more broad question here with the market near all-time highs here. How are you just kind of generally approaching some of these trades? Obviously, each trade is going to be its own thing, case by case basis. But how are you approaching looking for trades here with the market near or at all-time highs?
Here's what I said yesterday, that we're going to have like 2 days that feel like a week or a month, and then be willing to be bored in between. Here's what I mean by that. Snowflake, I started buying. I was waiting for the pullback after earnings. We finally got it Friday. We got that pullback to like 166, 167, right? And then yesterday gets the upgrade from Wedbush, and I'm like, oh my God, it's up $10 already. Now I can pretend that we're early, but we're not. The stock bottomed at like 110, right? I'm not early. And even Dan's target over at Wedbush was 190. So when we're almost at 180 yesterday, am I praying the market's just going to keep going higher, or am I selling most of it? So in other words, I know the climate we're in, I'm adjusting to it. I'm being a bit more aggressive. In other words, I would have liked to wait for Snowflake to pull back more on Friday. But I said, we're not in that market. It's not going to give us an easy buy. And then when it's time to take profits, maybe being more aggressive and knowing things have gotten, I don't want to say out of hand, but things are fluffy. Things are a bit crazy. So if I'm up 10, 15%, I'm not saying I'm going to be up 50% tomorrow.
Sure.
It's time to take some profits. And then in areas where I'm pretty comfortable, like NVIDIA, I wouldn't be shocked if I see 140, 142, 143 over the coming days. So I won't be in a rush to sell too much of it. So it's being cognizant of where we enter a position and how late in the game we are. I would think on some of these mid caps that have been leading, like fintech, like some of these small, like robotic stocks and, some of the crazy stuff that's been moving, we're a little later in the path, right? So here's one. So, everyone loves nuclear yesterday.
Oh, yeah.
There was that deal with NNE and people said, should I buy it? I said, no, like it really needs a greater pullback. And they did a deal that reads a little toxic to me, like the strike was so far below where it's trading. Let it come in. Just because it's off 10% doesn't mean it's a buy. And they killed that thing. That NNE, where is it now? It got to like 25.
26 and a half. Yep.
Yeah, it got to 25 yesterday. So my point is kind of be realistic on how far stocks have gone. And if they need to pull back, pull back. Another one was Block we own from like 82, 83. It was up to 92. A lot of people liked that chart. It was going to go the next leg. I'm like, guys, I get it. It would feel good. I think it's going to 100, but I think it's probably pulling back to 85, 86, 87 maybe before it does. So I'd rather miss buying more than buy it just because it's down $2. And that's how we're adjusting.
Okay, real good stuff here. Block is actually one that we've taken a look at too, and you're absolutely right. This is actually kind of rolling over from the resistance area that it's at.
It needs more than a 5% break, right? It might come in, and that's okay. It just went up like 30 points.
Absolutely. And that's the other thing. I think sometimes, FOMO gets the best of us, right? We see a stock that moves up 30 points. It's okay if it comes back in 5 points. Hell, that might be setting up for the next leg higher anyway.
I said that on Bitcoin on Friday. I said, listen, someone said, you think it'll get through 100,000? I said, I don't give a damn. Like it might go to 101, 102, but I'm really sure I said the next 5 to 7% is going to be low. Now it may go to 110, 102 and then 94, 95, but I think it's lower. So who cares if it goes through or not? I just think risk reward. So I was selling a lot of my IBIT. It'll go lower. And here we are. Now, did I know it was going to go here before 102? No, but sometimes it's simply a matter of, is the risk greater than the reward or the reward greater over the short term? So that's what I'm measuring.
So real quickly here, just to put some numbers to your Bitcoin example, because that is absolutely fantastic here. We did touch that 100K, 5% pullback here puts us at about 95K. A 10% pullback puts us at 91K. We're currently at 92K here. Spot on. That is absolutely awesome. Okay, David, I'm going to get you out of here on this. Again, folks, make sure that you download David's free ebook here. QR code is right there on the screen. Is there anything that you're looking at or planning for, considering we've talked a lot about planning here, for going into 2025? Maybe not individual names, although look, if you have some individual names, giddy up.
I've been pretty upfront. I'm planning for a difficult first half. Okay. I really think the comps are tough. I think forget about whether it's tariffs or whether inflation moves up a little bit because of Donald Trump. I think more than anything, we have to be cognizant that a lot of these leaders just put up ungodly numbers on the good side. And the comps in some of the leadership categories like semis and even in NVIDIA, you're going to see some deceleration. Doesn't mean they're not going to grow, but the rate of growth and law of large numbers might hurt some of these. So I'm just cognizant that, hey, we can pull back after a wild couple of years, and it might be a little bit more messy up front. That's what I'm thinking, that the comps on a lot of the big leadership, especially in the Qs, might be a little soft. Doesn't mean there won't be great buys, but we've come a long way.
Yeah, that's actually a really good point. That's one of the big things that I've been kind of waiting for here is we have come a long way, whether it's the SPY, the Qs, or some of those individual names. Let me ask you, just again, I'll get you out of here on this, but you just kind of reminded me of this. What do you think about this year, it sure seemed like there were just like a handful of really popular stocks that everybody is in. You know the names: Apple, Nvidia, the whole nine yards. What do you think maybe some diversification from those names would mean for the rest of the market? If we come in, if we start selling a little bit in Nvidia,
it's happened, and it's been the healthiest thing, right? Like MSTR, I mean, even if they went too crazy, the leadership has been the APPs, the MSTRs, the Robinhoods, the Affirms. So that's already happened, right? If you were to look at the last 2 months' performance of some of these fintech names, you can throw SoFi in there as well. Yep. And you can certainly throw Square, Affirm, Upstart versus NVIDIA and Meta. They're killing it versus some of these big caps. So I think it's been, I mean, that's why people are enjoying it so much. It's been a really healthy rotational market where big cap tech passed the baton, and it's been absolutely fine. And I'm drinking the Kool-Aid. I just don't think it's going to last forever. So I'm definitely aware 25 may not be as fun as the end of this year, but I'm having fun while it lasts.
Okay. I just a quick yes or no. We talked about a dartboard earlier. Quick yes or no prediction. Do we get a big correction at any point in 2025?
I don't know. To me, a big correction would be beyond 20%. Okay. I'm just comfortable. I'm really sure we get 15%, something like that. Beyond 20, my truth, I have no gut on that. But okay. I think 15, 18, something like that, easy. Okay. Big correction, I don't see any reason, unless tariff problems, inflation, and I don't pretend to be a macro guy. If I can see 3 months out, I'm lucky.
Okay. Makes a lot of sense there. Okay. David, thank you so much. Again, I want to personally apologize for calling you by the wrong name.
I could care less.
Be sure to download David's free ebook. Use the QR code. Take care of yourself, David. We will see you again. That is David Prince from T3 Trading.